What's going on, traders? Hope everybody's having a great weekend. Wanted to do some analysis here on the E-mini S&P futures as well as the NASDAQ 100 futures. We're going to go through this week's major economic calendar to start off the video. But of course, before we get into anything, reminder that this video is for educational and entertainment purposes and in no way should be viewed as financial advice. All right, so with that out of the way, let's start to get into the calendar for this week and take a look at what we have in store. Definitely an action-packed week we had last week. Volatility was out of control, and we saw some huge moves in the market. Let's go over the calendar first, and then we'll get into some of those charts. All right, so what do we have for next week? Well, we have a pretty quiet start of the week. Monday, nothing really on the docket, but the games begin on Tuesday, August 13th with PPI coming out at 8:30. Very interesting data point that we shall be looking at as far as that inflation. And then we've got the big daddy of the week, CPI, coming out 8:30 there. So we've got two big prints of data Tuesday and Wednesday. Watch out for some choppy price action. Of course, we also had just these huge moves in volatility. Now it would be more likely we've already started to see that volatility drop, although it is still elevated. We have a VIX still over 20, still over 15, but we aren't trading with the VIX up in the 40s and the 30s anymore. So we have to be aware that even though we do have these big economic data points coming in, we might not see the moves that we have seen over the last start of last week. Either way, Thursday we've got jobless claims at 8:30, retail sales, and a few other data points. Nothing really major there. Friday, Michigan consumer sentiment at 10 o'clock. Pay attention to that as well. But of course, the big days are going to be Wednesday and Tuesday. So again, watch out for that choppy price action Monday. Little hesitation. We'll get the data print. CPI, of course, moves the market a bit more. PPI a little bit less. But after we see that PPI print, could see some nice volatility or some nice moves in the morning session, and then it might get a little bit more quiet as big money sits on the sidelines ahead of the CPI print. All right, so with that out of the way, I guess I don't have the calendar up. A lot of the earnings pretty much over. Of course, we have NVIDIA coming up soon, but that is not this week. I do know we have Walmart, Home Depot, Baba, JD, and Applied Materials, AMAT, all this week. AMAT might be interesting Thursday after the bell. For a semiconductor perspective, Walmart and Home Depot might be interesting just to look at the numbers to kind of get a look at how much expendable income people have to fix their houses. What are they spending out when they're going out shopping at Walmart? Are they utilizing stores like Walmart that might be a little bit more affordable than a standard grocery store or something like that? So I think that those could be interesting a little bit from that macro perspective. I think Disney also reports as well, but other than that, nothing really too important. All eyes are going to be on when NVIDIA reports later in the month. All right, so let's get into some charts here and start to break down the weekly chart. Now I've mapped out this weekly range, and again, we talked about that volatility that we have seen in the market. And we have, what is this, about 200 points here on the SPOOS on ES, just incredible. So again, watch out for, even though we have this major economic data, watch out for potential trappy price action. Still a very tradable range, almost 200 points or just over 200 points. Either way, just be paying attention to that. I think it's also important here we have this prior week's range high and low mapped out. That way we can also use, if we're over and under, for a little bit even more of a bias check. If we really start to seeing acceptance or we close the week outside of last week's range, well, then we can say, okay, and we can predict for potentially some higher prices to come in. And of course, the opposite if we do break last week's lows. That should go without saying. All right, so I've already kind of done up one of the charts I want to be looking at here. We're going to first just kind of see and note what we're seeing in the last week candle, right? We pushed down here basically that 5100, and that was basically the daily 200 period moving average EMA where we saw buyers. And let's also just take a look at some context of where really what's going on here in our trend sequence, although we are in slight daily downtrend right now. Overall, things are okay, and again, noting that we bounced right off the daily 200 on ES. So is that really a bearish sign? No, not really, even though structurally, yes, we do have plenty of work that the bulls need to do to really start to recreate a new uptrend overall in this little sequence that we've been having. But again, if we zoom out, what's really going on, right? We had our swing low here, a higher high, higher high, higher low, higher high. And you can see here that on this dip, right, we did not match a lower low here. So this print is still higher. This is still a higher low being put in overall. Right, so we have to keep that in mind and in context. I do want to note, though, again, the ferocity of this downturn move is a little bit stronger than this move, so I think that that is worth noting overall. However, there are definitely some signs that we could see a little bit more of that bounce. Now, I know last week I thought we would see a little bit more of a bounce Sunday into Monday into Tuesday. We gapped down on the Globex Open. I think that there was some geopolitical news with the Middle East that came out and spooked the market. Sunday was wild. How tech was down, I think 700, 800 points. It was really just insane. Hadn't seen this type of moves in the market in a long time. So really, it was really, really interesting and kind of good practice to kind of, interact a little bit with that environment very cautiously. Needless to say, we have bounced back up. We are still under that daily 9 here, the weekly 9, and that's sitting at 54.45. So I think that'd be important to kind of map out. But what also needs to happen, right? If we're just going to look here from that structural standpoint, right, the bulls still are going to need to start to recapture, right? We need to get back over, if you're bullish, the week of July 1st, that low. So that's going to be right around 5,500. And we've already talked about that level before in last week's video already, 5,500 being really that critical spot for the bulls. And we certainly already spoke about that 5,400. And look where we ended up actually closing. Did we touch it? The high was 53.85. No, so we got close, about 20 points away thereabouts. And that's going to be really that first daily trigger for me to see if we can have any chance to come up another 100 points to come and restart to retest, right, this structure breakdown right here that I was just mentioning. So we've got that weekly range already mapped out. That's good. Those will be some important pivots. And let's go into the chart I already have here kind of mapped out for us to look at. And you can see here I've got the 5,400. That's what we're going to need to see. And then I think we can have a chance to potentially come down real close to maybe 5,450, maybe 5,435. Have to keep an eye on the weekly lows of the 22nd, which are sitting at 54.32. So we could see some sellers come in there. Also a nice potential target as well if you are long over that 5,400, maybe a first target or a all out right there. But we are still vulnerable under that 5,400. So if you are looking for that short side, we were talking about not shorting the whole on last week's video. Of course, the timing of the bounce I was a little bit off on, but we did get that nice push back up, and that's why we were warning about that really being extended from those moving averages and just a very outsized move. But now if you are bearish, we are coming into one of the first zones that potentially we could see a downturn right, in the market. If we come up in that 5400, see immediate rejection or potentially a look above and fail type of scenario, either way, I'd be on watch for that as your first potential area where we might see some sellers, and you have a much better risk to reward for a short trade. And we closed about 53.65 away from the high, so still a little bit of room to the upside before that potentially that setup might reveal itself, or that trade idea might reveal itself, I should say. All right, let's get into the daily chart here and take a look at what we can take away from that perspective. And you can see here a little bit more of that structure and what we want to be seeing. Now, I'll also be marking off, we're going to have to pay attention. Friday's session lows, right? Another way to potentially see what our intraday bias is going to be. Are we going to be trading under that low? And I'll be marking and looking off. Keep an eye on that 53.15. Basically, the low is 53.18, but I think 53.18. 53.15 might be a little bit better to really get that confirmation that we are potentially going to come down lower. But not the best structure really here created just on the Thursday session. So if we do start to really see a pull under that 53.15, I think it would be likely that we would drop at least another 15 points down to that 5,300, and that's really going to be the breaking point where we had that potentiality to start to chew through some of this daily candle and potentially come back down to retest these areas down towards 52.50. And that would be the bearish case, right? In the bullish case here, we break up over that 5,400 as we already spoke about. Maybe again targeting as close as we can get to that 54.50 area. We talked about that 54.30s, those weekly lows there, so have to pay attention to that level as well. Might as well mark it off here and make a little zone, right? But even if we start to see price accept up here, now this is still kind of a neutral here. I'm starting to feel a little more optimistic, but it's still cautious, very cautiously bullish to a neutral standpoint. Because, right, what's going to have to happen, right? We're going to have to get over the 55 whole number to really start to neutralize this trend overall. I think, if we start to see acceptance in here, it's going to be a step in the right direction, but we're going to have to see this, or if it stays under, we're going to have to see that, right? So although this is a step in the right direction, it may just be very trappy with fake breaks too. We come up, maybe we break up, we break down. So be cautious of that, right? But if we get again over that 5,500, then we can really start looking at that true uptrend being created. And I would say the bulls are getting out of the water and really have the potential. Their final task, is going to really start seeing acceptance over this 56.30 area. Right, then we can then we're back inside this Then we're back inside this. Oh, come on now. Then we're back inside this prior structure, and we can look for, the trades to come up into the equal highs of all-time high, but one step at a time, right? We certainly, for the bear case, we certainly start seeing acceptance under here again. Well, then look out below. It would be very likely that we were going to come down here once again, probably targeting 51, 75, 78 area, and then under that, we'll go ahead and sweep this lows down here back towards 5,100. And that would be obviously the worst case scenario for the bulls, best for the bears. So, but under 5,300, I think really starts to open up that gate for the bears to start to come in. So we'll see if we get that 5,400 test. It's anybody's guess. One other thing, though, I did want to mention. Let's zoom out. Let's zoom out here on a macro trend. I just wanted to point this out here. Probably have to go back even further. There we go. So let's look at this from a big macro perspective now. We're going back to 2000. What's happening? October high, right? Boom. So, big picture, obviously, this is nothing. It's just simply coming back to retest this big major trend line. Okay? A little context there as well, which I think is always helpful. Let's go into some day trading levels here and see what we can take away from a little bit more of a granular perspective. Okay, so for me, a little bit more continuation. I want to see ES really accept. Let's see a 30-minute. You can see this 30-minute. Let's see a 30-minute hourly candle back over 53.75. Then we get bullish, start to see if we can attack that 5400. Over that 5400 we already kind of spoke about. What do we have here is this next pivot, right? The 5430. So we already spoke about that, right? But if we do get over, this is not right. But if we get back over, then we can talk about 5450 and potentially 5481, and then we can go from there. For the bear case, stay below 53.75, but really, unless we start to really see under 53.615, you know, yes, this is tradable, but we may stay in this range, right? So overall, I mean, that's 60 points. It's definitely tradable. We got to see, you know, what goes on here with VIX. But just be aware of this. Under, you know, there could be short trades here for sure. You know, I think that within this range, certainly if we get back under these highs here, so I would say maybe under 53.50, can look a little bit more towards that short side, maybe under 53.45, and then we could see about attacking down into 25 into 16 down here. Under that 16, of course, we're going to, under 53.16, 15 area, we're going to, of course, target that whole number of 5,300 once again. Under that, probably down here into the 70s, 80s. So you've got your two kind of paths here. Or okay. So we'll see what we get. All right, let's move along here and get into the NASDAQ. Okay, looks like I'm going to do this one over with you guys. Cool. All right, so what's going on here? Everything's the same. This one got a bit closer, but still you can see we did not match the equal lows, so it is still overall a higher print from April. We are, of course, still in this downtrend and plenty of work to be done. And what needs to be done here? Well, let's see. Now, we're certainly going to look at this prior balance right in here. There we go. So I'm going to be watching. Actually, it should be a little bit higher. There we go. I'm going to be watching this prior week's low, the week low of July 29th, which is 18,385. Okay, let's see. That's gotta hold. No ifs, ands, or buts. But now what really needs to happen, right? We need to start to get over and see acceptance over these weekly highs from May, right? This balance area here that caused this breakout, right? That's the structure. And it should actually be a little bit bigger. I'm gonna... Oh. Okay. So I'm going to look at the high here from June 3rd, which is 19,115. Yes, 19,115. Okay. So now that we're back within this structure, we do have the opportunity to potentially see moves back up real close to that 1900, maybe 19,150, but we'll break it down a little bit more on the daily chart. Excuse me, on the daily chart. The thing, oh shoot, the thing also I want to pay attention to here and what we need to watch is going to be that prior week low as well. So that low is 18,883. Okay, we'll pay attention to that as another really key pivot for the bulls or the bears as a potential short idea for that better risk to reward, or that if we break over, that it would be more than likely that we would trade to the top part of this balance. All right. Now, again, we already have, we already can pretty much see, and we've mapped it out, this previous structure. So that's going to be, and it's the weekly low of June 24th. Right, and you can obviously see that's also the high of the week of the July 29th. That's going to be the next critical spot from the weekly perspective. We'll just mark off the top part of this. Boom. Right? So that's what we've got here. Let's break it down. Let's get into the daily now. Okay. So we have to hold, right? Friday session low. Anything under that, we'll probably see price get delivered back into the Tuesday, Monday range down in here. Again, this could be very thin structure that easy to retrace through. Okay, kind of very powerful move. So let's be on watch of that. But have to maintain a little bit more of that bullish bias, at least somewhat intraday, if we're still above that session lows from Friday. Really quickly, I wanted to note the moving averages for the NQ here on the weekly. Okay, weekly 9 is at 19 to 12. Yeah, 212. And the 20 is about 300 point, 200 point, 300 points away. Not that far. Basically at 18 of 400 points, 18,900. So a little bit of work there, but it's very possible we can come up and retest it. And that 20 might be, again, one of your next potential short trade areas for that better risk to reward and a better trade location. Daily looking a little bit more constructive, being over the 9 at 18,600 basically. Basically closed right on the daily 9, which is interesting. Kind of non-committal there. So, that's a little bit scary. I would have liked a little bit firmer close over that, but we did not get that. The daily 20s just sitting just below us, just below that at, or excuse me, quite a bit higher, my fault, at 1940. So a bit of ways to go there for the 20 on the daily. Have to note here, we're in that oversold condition, starting to see momentum pick up. We saw it here and then totally fail, but starting to pick up again. So from the daily perspective, as far as this oversold reading here, that's and starting to perk up. I think that's a little bit encouraging. Right. So we might have a little bit more upside before we really see any potential downturn. But we're still vulnerable, right? We can come up into here, and we can still come up into here. Maybe we bounce, maybe we don't, we break. That part, of course, we don't know. But those are still two shorts that are open if we come up there. I think if we do get over 19,160, probably more than likely attack these highs here from July 3rd, the end of the month of July, up into the 19,400s. So I'm going to mark that off as a potential target up there. Right, and that's pretty much the high of this flag here. It gave us that breakout. We get over that, then we can come up for that real test. This is the big one. At 19,730 thereabouts. And we'll go from there. And let's see. I mean, it's a steep downtrend. And we've already talked about what's going on here in this sequence, right? Got our lower low, we got our retest here on a lower high, lower low, lower low. So what is really happening? And they can still, even from here, it's still a lower high. It could come up to here and still be a lower high, and I can come up to here and still be a lower high. This is the area where it starts to get into that, okay, we're in that potentially bullish to cautiously bullish to neutral-ish standpoint. And we can see chop in here as well. And then just like ES, we've got to wait. Either we're going to make that move or we're going to fail back below and we're going to make that move. I mean, this is certainly tradable. That goes without saying. But bigger picture, of course, we just have to be aware of that if we get trapped there. But that's our neutralization zone here. So, we'll see. I can mark off some other levels that we'll be watching here, but we're not there yet. But we certainly, I'll highlight it like this. Certainly be paying attention to kind of this area here. That's still pretty far away. So we'll wait, but I think that this little structure area will be important to kind of map out. We'll see. We'll see. That's around that 20K. All right, let's break it down. Look at some day trading levels here. Okay, so really, if the Bulls want to get something going, let's go back to 10 days. If the Bulls want to get something going, right, gotta get over basically 18,700, right? We need to take that out, and then actually, it'd be more than actually. That was a bit off. I think maybe this could be a wee bit lower here. I think that's fine. Okay, actually, 18,700 to 18,720. I'm gonna say 18,725. That's really what I'm gonna need over. Right, getting over this, I think would be good. Then we can look to see about attacking up into 18,800, 18,845, and then up into 1900. Right, got to look at this base here. That gives us 18,850s. So, and then over that, I think the 900 would be possible. But depends where we open. We can still just do this. Still vulnerable there. We get over. Okay, then I'll be looking for that. Now, if we start to take out these highs right here, 18,550, 18,560, sweep these highs from, what is this, Wednesday? I believe so. You can see what happened. Will it be this aggressive? I don't know, but so watch that area there. Start getting under that. We'll be looking for trades down into the 400s if we start to get under, right? We get under 18,400, 18,415. Well, then watch out because we're going to trade back up into this area here. Ultimately, we could come back down to 18,250, 18,240, scaling along the way. But it would be more than likely we do that. Then we could potentially look for a buy. Maybe we set up on an inverted head and shoulders. Who knows? I'm just making stuff up now, and then we rip back up. Just a random thought. Who knows? Under this pivot though, under 18,230. Well, then look out below. We'll trade down into the lower part of this range and attack 1875, 18,100 again, 18,125 down in this lower part. Right. So, and if we got under that, well, then look out below, and we're gonna go back to what is this? The lows here from the end of the day on what is this, Wednesday night. So interesting. It's anybody's ball game here. All right, let's take a look at the Dixie, see where we are at the dollar. Is it still dropping below 104? Yes, it is. Continues to melt and come down. I believe we were talking about, I don't know if we marked it off. I think we were talking about it coming down to this 102 level. Did I mark it off on another one? It's possible, yeah. I mean, so boom, came right around into that area, right into these lows. We'll see. I mean, now it's backwards, right? Dollar goes up and the market goes up. from what we've seen. Let's look at yields here. Yields pushing up, market pushing up. So if yields break under 39, then watch out. I think that would probably not be good for the market. We'll watch that. All right, let's get into some of our internals here. Actually, let me check on one thing. Oh, okay. All right. Ooh, wow. The VIX. Look at that move. 65. Okay, so let's get into the VIX here a little bit. Cooled off, couldn't sustain, and now here we are back towards where we originally kind of broke out from. So let's see, is it possible here we see again VIX, it can come down to 19, basically 18, and still be a threat, and still a threat over 1575. Watch right here. It's very possible we see some retaliation. Whoops. Could get something like this, and then we come back down. You know, or we could come up and we could loop and go up like that. So, but all potential scenarios there. If we see this 23 area again, possible long trade, because what would be going on, right? It would just be making a lower high. So if you saw that market's down, maybe that could be a long signal for you. Even this up into near 25. Right, markets are dropping, VIX is coming up to 25. You hit the long and see if it comes back down. We were talking last week about the put-call ratio being extremely offsides, one of our data points. We were talking about that counter trend rally being put in. You can see now it's cooling off a bit. We've got that rally stabilizing. Still slightly offsides to the bearish side, but that's exactly what we were talking about here when we got these high readings. We said, okay, everything's too offsides. More than likely we'll see some type of a bounce in the market. Let's move it right along. Now here's something I don't like. New highs versus new lows. Not over the zero line. Didn't close over the zero line. We tried to get back over. Not what you want to see as far as the breadth's concerned. No, that's not good. Let's see if we can get this close next week over the zero line. A little threatening there. Bearish indication. Had a bit of a divergence earlier in the week on the HYG, the junk bonds. You can see they had a nice push after no one wanted anything to do with that. Risk off. Everybody went into TLT. They had no interest in these high, on these junk bonds and higher yield bonds. But now they're starting to pull back up with the market. And I can say here, from at least the SPY perspective, we were just below this big daily trend line. Here you can see the lows here. You can see the effects here, right? Basically here, caused a breakout here, retested, went up. Now we're back above. So I think that for anyone trading SPY, another area could be interesting just to watch. Basically around that, basically 530. 530 can be some type of a pivot there, I think. if we start to see come in, then a potential bounce, or the bearish scenario we break under. So, but interesting here, bonds now in sync, junk bonds in sync, moving up here with the market, but overall still lower. So we'll see if it can catch up for any risk appetite there. Let's go on how many stocks are trading over their 50 period moving average. Oh, hey, we made it back over the 50 line. That's constructive. Looking good there. Like to see that. Nothing really going on here on the 200 that concerns me or worries me at all. So this is good. One good data point for the bulls. Let's look at the VIX futures here. Still in backwardation. Need to see this over the 0 line. Still a threat here. Yeah, this one's starting to get a little bit better. Go back into contango. The VVIX, wow, almost hit 200. Holy cow. Still over 105. Still a threat. Volatility is still there. So over 105, 103. Talked about that many times, that level. Still over. Definitely looks like this is collapsing, though. Maybe we might come down and retest that area. But as long as we're still seeing readings on the VVIX over that 105, 103 area, still elevated volatility in the works. And we've been over this, how do we trade with the higher volatility? We break down up, we make our trading size smaller, and we use wider stops. Now, we're talking about TLT pulling back. And you can see here we matched these equal highs, and we did get that pullback here on the 20 and 30 year. Bit of a bounce in the market. So we'll see here, what are the bonds bouncing? And the market was bouncing. Now we had the bonds, now we had that flight to quality where equities were getting sold, bonds were going up. Now we're seeing this bounce and bonds are going up. Now is this, who's lying here? Is the flight to quality over? It's kind of interesting that we had this new regime that we've been seeing, which we've already mentioned in last week's video, that before when TLT went up, the market went up. But now it's the opposite, and we're seeing TLT bounce, but the market go up. So is this a negative divergence? Potentially. Short-term bonds, though, coming up, and we're still below the 50 here on the ratio, and we would want really this to get, we're going to watch that 50 period moving average. It's still under it. All right, anything in the Dow? I don't think so. Nope, trapped. Nope, they're in lockstep, so nothing as far as divergence going on there. Okay, well, quicker video today. Wanted to kind of blow through it for you. A very interesting time. Again, let's watch out for that choppy price action ahead of PPI and CPI. And be mindful with your position sizing with the elevated VIX. Remember, trade your plan and plan your trades. Excuse me, sorry, bang my knee. And I hope you guys have a great rest of the weekend. If this is your first time enjoying the video and you liked it, take a second to subscribe to the channel, turn on those notifications. And for all the loyal subscribers, people that interact with me, followers here and on social media, love you guys so much. Appreciate every one of you. You guys make it worth it for me to put out this content. So I appreciate all of that support. All right, guys, I hope you have a great rest of your weekend. Be safe. Take some time with family and friends, and then get in there and start preparing for the week. Should have an interesting one. All right, team, I will see you guys on Monday. Trade safe, trade smart. Take care.